Hello everyone, welcome to Tesla Daily News. Today is May 29th, Friday, and the following is the latest Tesla news. According to market data from Wall Street, Tesla stock finished the last trading session at $442.10, slightly above the previous close of $440.36. Intraday, shares opened around $437.62, touched a high just under $444, and dipped to roughly $436.30 on volume of about 32 million shares. Short-term uptrend intact, bulls defending support on healthy volume. From a technical perspective, Tesla shares are holding above recent support in the mid-430s, with buyers stepping in on minor dips and a modest expansion in trading volume. For traders, the key zone to watch remains the $430 to $450 band, where any decisive breakout or breakdown could set the tone heading into the potential SpaceX IPO and broader AI EV news cycle. According to Motley Fool News, the most market-moving development around Elon Musk's empire is actually the looming SpaceX initial public offering, which could instantly value SpaceX higher than Tesla on day one. The report says SpaceX has publicly filed its SE and is preparing a Nasdaq debut under the ticker SPCX as early as June 12, with pricing expected the night before and the investor roadshow in early June. The targeted valuation range runs between roughly $1.75 trillion and $2 trillion. That is notable because Tesla's current market capitalization sits near $1.65 trillion, meaning Musk's space and satellite business could surpass Tesla in market value immediately at listing. Motley Fool mentions that the reason markets are willing to pay such a premium for SpaceX is not the rockets themselves, but the cash-generating power of Starlink, its satellite internet arm. In 2025, Starlink revenue reached about $11.4 billion, up almost 50% year-over-year. Operating income more than doubled to roughly $4.4 billion, and adjusted EBITDA jumped 86% to about $7.2 billion. Subscriber growth has been extraordinary. 10.3 million subscribers across 164 countries, up from 8.9 million at the end of 2025, 4.4 million in 2024, and 2.3 million in 2023. At the same time, the article notes that revenue per Starlink subscriber has drifted down from around $99 per month in 2023 to about $66 this March, as cheaper plans and expansion in developing markets pull the average lower. Even so, the connectivity segment still brought in $3.3 billion in revenue in the first quarter alone, with roughly $2.1 billion of adjusted EBITDA, making Starlink a massive, fast-growing telecom business in its own right. The piece also highlights that SpaceX's reported overall net loss of $4.9 billion last year is largely driven by its newly consolidated artificial intelligence segment. Following a February merger that folded xAI into SpaceX at a combined valuation of about $1.25 trillion, the AI unit lost $6.4 billion in 2025 and another $2.5 billion in the first quarter. SpaceX has told investors that it expects to begin launching orbital AI compute satellites as early as 2028. For Tesla shareholders, this matters because it reframes Musk's broader ecosystem. Investors are being asked to value extremely long-dated AI and autonomy bets both at Tesla and at SpaceX, but only SpaceX currently pairs those bets with a booming, highly profitable anchor business. Meanwhile, Motley Fool points out that Tesla is in a transition phase. 2025 marked Tesla's first year of annual revenue decline as a public company, a sharp contrast to the relentless growth story of the past decade. The most recent quarter in 2026 showed a return to top-line growth, with revenue rising 16% to about $22.4 billion. However, deliveries of roughly 358,000 vehicles fell short of market expectations. Management also signaled that capital expenditures will climb above $25 billion this year, largely to fund AI compute infrastructure and upcoming products, including the Cybercab robotaxi platform. Crucially, Elon Musk cautioned on Tesla's earnings call that the company's autonomous ride-sharing business is unlikely to be financially material this year. Once that near-term robotaxi revenue is stripped out, investors are left with a vehicle segment that contracted in 2025 and an energy business that saw a 12% revenue decline in the first quarter, all while Tesla trades at a rich price-to-earnings multiple around 400. The article's key message to Tesla investors is that markets are already paying heavily for stories Tesla has not yet scaled, such as full autonomy and AI-driven services. The same kind of long-term faith is now being asked for SpaceX, except that Starlink's current numbers give that faith a stronger earnings foundation. From a portfolio perspective, this looming SpaceX IPO raises important strategic questions for Tesla enthusiasts. If the IPO launches at the high end of the valuation range and trades well, it could boost sentiment around Musk-linked assets in general, possibly providing a halo effect for Tesla's stock. It might also increase comparisons between Tesla's growth narrative and SpaceX's, possibly pressuring Tesla's valuation if investors decide that the more compelling growth story now sits in orbit rather than on the road. For long-term shareholders, it is a reminder to continuously assess how much of Tesla's price already bakes in ambitious assumptions about autonomy, AI, and new product lines that have yet to ship at scale. According to Finanzen.net, European investors are also looking at SpaceX through the lens of early backers and what the IPO could mean for global capital flows into Musk-related ventures, including Tesla. The report, written in German, suggests that SpaceX's offering could be the largest IPO in history, with a potential valuation exceeding $2 trillion and a placement volume of up to $80 billion. It emphasizes that Elon Musk holds around 42% of SpaceX's equity and controls nearly 80% of its voting rights, setting him up for an unprecedented wealth increase. Finanzen.net mentions that this event could produce more new billionaires than any previous single corporate milestone, as early venture capital investors such as Founders Fund, Sequoia Capital, and Andreessen Horowitz see massive markups on stakes accumulated over many funding rounds. Major institutional investors like Fidelity, Baillie Gifford, and Valor Equity Partners, along with specialized funds such as Barron Funds and ARK's private innovation vehicle, also stand to benefit. Alphabet, Google's parent company, reportedly owns about 6% of SpaceX and is among the key strategic investors. For Tesla followers, the European article underlines that a hugely successful SpaceX listing could further concentrate wealth, attention, and optionality in Musk's hands. And Musk, whose net worth potentially crosses the $1 trillion mark, gains even more flexibility in how he allocates capital, time, and strategic focus between Tesla, SpaceX, XAI, and any future ventures. That concentration carries both opportunity and risk for Tesla shareholders. On one side, a stronger overall Musk ecosystem could strengthen Tesla's partnerships, access to AI compute, and cross-company talent. On the other, regulators, corporate governance advocates, and some institutional investors may push harder on issues such as time allocation, conflicts of interest, and cross-company dealings, especially if Tesla is seen as subsidizing or being overshadowed by Musk's other projects. According to National Newswatch in Canada, Tesla is facing a fresh policy and legal battle in the province of Manitoba that could affect its competitive position in the key North American market. The report says that Manitoba Premier Wad Kinew has received a notice from Tesla Motors Canada indicating the company intends to seek a judicial review of the province's decision to end electric vehicle rebates for Tesla models and for vehicles made in China. National Newswatch reports that Manitoba's NDP government had introduced broad EV rebates of up to $4,000 for buyers in 2024, but later excluded Tesla vehicles and Chinese-made EVs in response to trade tensions and tariffs imposed by the United States on Canadian goods. Tesla's letter, circulated by the Premier's office, argues that the move to end rebates specifically for Tesla and Chinese vehicles was procedurally unfair and executed for an improper purpose. Company officials had not yet commented publicly beyond the contents of the letter. The Premier stated that the government would only consider reversing its decision if the United States drops its tariffs on Canadian exports, effectively tying Tesla's provincial incentive dispute to a much broader geopolitical trade negotiation. For Tesla investors, this highlights the ongoing policy risk facing the company as governments use EV incentives as tools in trade disputes and industrial policy. While Manitoba is a relatively small market in unit terms, the precedent of targeting Tesla rebates for political reasons could embolden other regions to apply similar measures, especially where domestic automakers lobby aggressively. From a financial standpoint, vehicle demand is highly sensitive to net purchase price, and rebates can materially affect Tesla's price competitiveness against both legacy and new EV makers. If rebate exclusions spread, Tesla could be forced to adjust pricing or offer its own incentives in certain markets, pressuring margins. Conversely, a successful legal challenge in Manitoba could strengthen Tesla's position when contesting policy moves elsewhere, reinforcing the principle that incentives should be technology neutral rather than brand specific. According to Business Talk at the Greek outlet Kathimerini, Tesla is reshaping market share dynamics across Europe, while at the same time facing intense competition from Chinese rival BYD. In a broader review of European vehicle markets, the article notes that the European car market returned to growth in the first 4 months of 2026, with total new registrations up about 4.2% despite geopolitical uncertainty. Battery electric vehicles have accelerated, lifting their share of new registrations to nearly 20%, while hybrids dominate with more than a third of the market and traditional gasoline and diesel continue to shrink. Within this landscape, Business Talk highlights that Tesla's registrations in the European Union jumped about 61.7% in the first 4 months, to roughly 67,389 units. However, BYD expanded even faster, with an explosive 152.9% increase and around 71,863 vehicles registered, overtaking Tesla in volume in the European market over that period. The article frames this as a signal that Chinese manufacturers are no longer marginal players but direct threats both to traditional European automakers and to Tesla's once uncontested leadership in the EV space. For investors, this is an important data point. Tesla's successful growth in Europe shows that its brand and products remain highly attractive, but the BYD numbers confirm that price-aggressive Chinese EV brands are rapidly scaling. If BYD and others can maintain this momentum, Tesla may be forced to lean more heavily on software, autonomy features, and energy services to defend its margins, rather than competing purely on vehicle price and hardware. European regulators, already wary of Chinese industrial dominance, may respond with tariffs or non-tariff barriers, potentially benefiting Tesla indirectly versus Chinese peers. But any broad backlash against foreign EVs could also complicate Tesla's global production and sourcing strategies, given its Shanghai plant and Chinese supply chain connections. According to El Plural in Spain, global EV trends continue to tilt in favor of battery electric adoption, creating a long-term demand backdrop that remains supportive for Tesla, even as competitive pressures intensify. Drawing on the International Energy Agency's Global EV Outlook 2026, the article reports that electric passenger vehicles captured roughly a quarter of global new car sales in 2025, with more than 20 million units sold and about 20% growth over 2024. For the fifth consecutive year, the global market added roughly 3.5 million additional EVs versus the prior year, and around 5% of the world's total car fleet is now electric. El Plural notes that China remains the clear leader, selling more than 13 million EVs in 2025, with monthly EV share above 50% in most months and about 13% of its total fleet now electric. Europe saw the strongest growth among major markets, with EV sales rising over 30% to about 4.2 million units and reaching a market share near 28%. In the United States, by contrast, EV penetration stalled around 10% and even declined in the final quarter of 2025 after the removal of federal tax incentives. The article underscores the geographic concentration of EV manufacturing. Chinese automakers supplied about 60% of all EVs sold globally in 2025 and produced roughly 22 million units, or 3/4 of total world output. China also doubled its EV exports to more than 2.5 million vehicles, with over 35% of its automotive exports being electric. At the model level, sales remain heavily concentrated, with just 5 models, 2 of them Tesla's Model Y and Model 3 accounting for around a fifth of all pure battery EV sales worldwide. Looking forward, the IA projects EV sales of about 23 million units in 2026, lifting global share to roughly 28%. Europe is expected to lead growth with a further 20% increase, while US sales may fall more than 20% due to incentive changes. For Tesla stockholders, these projections reinforce that the secular tailwind for EV adoption is intact, especially in Europe and China. However, they also confirm that Tesla faces increasingly capable and cost-competitive rivals, particularly from China, and that policy decisions such as US tax credit changes can materially impact demand. According to Navharat Times in India, Tesla is pushing ahead with innovative hardware and HVAC designs aimed at improving passenger comfort and extending effective driving range, especially in hot climates where cabin overheating is a serious issue for EV owners. The Hindi report explains that Tesla has filed a new patent for using the car's panoramic glass roof as an integral part of the air conditioning system. Instead of being just a large pane of glass, the roof would become a distributed air outlet, delivering cooled or warmed air evenly throughout the cabin from above. Navharat Times describes how the concept would work. Beneath the main panoramic glass, Tesla would install a second, inner glass layer perforated with fine holes. The HVAC system would channel conditioned air into this layer, allowing it to flow gently and uniformly down from the ceiling toward passengers' heads and bodies. Cool air descending from the roof would displace warmer air, which naturally rises, and Tesla is also exploring a complementary system to actively draw hot air out of the cabin. This design aims to eliminate the oven effect often experienced under large glass roofs in intense sun. The article outlines several potential benefits. First, cabin temperature could normalize much faster, since cold air would be spread widely rather than blasting from a few concentrated vents. Second, the load on the main AC system could drop, because the roof-based distribution is more efficient at cooling the entire volume of the cabin. Lower HVAC energy use translates directly into greater effective driving range for Tesla vehicles, an important selling point in markets where charging infrastructure remains limited. Third, passengers may experience more uniform comfort, no more freezing faces while backs remain sweaty because the air flows across the whole body. In winter, the same system could distribute warm air from above, improving heating efficiency as well. Nap Times also points to real-world challenges. Manufacturing a dual-layer, finely perforated glass roof at scale could be technically complex and expensive. Repair or replacement costs would likely be higher if the roof were damaged, given the integrated HVAC functionality. For now, the concept exists only as a patent. Tesla has not announced when this technology might enter production vehicles. For investors and enthusiasts, however, it underscores Tesla's continued focus on vertical integration of hardware and climate systems to enhance range and user experience, differentiating itself from competitors who often rely on more conventional HVAC architectures. According to Times of India's technology desk, Elon Musk also continues to influence broader economic debates that can indirectly shape policy around markets, innovation, and taxation issues that matter for Tesla's operating environment. In a recent post on X, formerly Twitter, Musk commented on a discussion about Austrian economist Ludwig von Mises and socialist economic planning. He wrote, quote, "Prices are critical information without which an economy cannot function." The Times of India notes that this remark was in response to an account summarizing von Mises's argument that centralized socialist planning cannot work effectively because it lacks genuine market prices, and therefore cannot perform accurate economic calculation. The thread contrasted von Mises with economist Oscar Lange, who once proposed a kind of market socialism where a central authority adjusts prices by trial and error. Musk's short but pointed reply aligned him with the view that decentralized market prices are essential signals for resource allocation. The article reminds readers that Musk has criticized socialism before. Earlier this year, he responded to a post contrasting capitalist and socialist approaches to poverty by warning that, in his view, efforts to eat the rich would leave people starving once wealth creators were gone. While these comments are ideological rather than operational, for Tesla investors they highlight Musk's continuing role in public debates over wealth, redistribution, and the role of large private fortunes. Such debates can eventually influence regulation, tax policy, and public attitudes toward large corporations and billionaire LED firms like Tesla. According to 9 News in Australia, Tesla's Autopilot system is once again in the public eye after a viral clip appeared to show a driver seemingly asleep behind the wheel on one of Sydney's busiest motorways. The Instagram video, tagged as being recorded on the M2 motorway, shows a man in a white Tesla leaning back in his seat with his eyes closed and his hands off the steering wheel. After a few seconds, he opens his eyes, places his hands on the wheel, and gestures toward the person filming, apparently indicating that he is awake and aware. 9 News explains that the man was likely using Tesla's Autopilot, which provides adaptive cruise control to maintain speed and following distance, along with auto steer to keep the car in its lane by detecting lane markings, road edges, and other objects. The report stresses that Tesla's official documentation clearly instructs drivers to remain fully attentive and keep their hands on the wheel while using Autopilot. If the system detects insufficient driver attention, it can lock the user out of Autopilot for safety. The article also notes that while some Tesla models offer a so-called full self-driving mode, fully autonomous operation is not legally permitted on Australian roads. Incidents like this fuel ongoing regulatory scrutiny and public skepticism about driver assistance systems, even when no accident occurs. For Tesla shareholders, reputational risks around Autopilot and FSD are important because any high-profile misuse can prompt stricter rules, increased liability exposure, and delays in regulatory approval for more advanced autonomy features. At the same time, these stories underline a persistent challenge for Tesla, balancing aggressive marketing of advanced driver assistance with clear communication about current system limitations. Thank you for listening to Tesla Daily News. If you enjoyed this episode, please subscribe and stay tuned for our next update.